When there's a major drop in the stock market, it's often said there's an exit of money towards assets that are presumed safer, such as precious metals, namely gold. This inverse correlation does appear, but it won't always be a certain guarantee for the entire duration of a major drop in the stock market. Silver, being considered a precious metal, can also have a lower correlation to the stock market, but don't be surprised if there's no strong negative correlation during a major drop, such as in this case. The correlation could just be weak and close to non-existent during this period. This concept can also be applied to look for major outliers in the stock market during a major drop. And after this less common event, it's natural for the stock to get back more in sync with the rest of the stock market over time. So it won't be realistic to expect a stronger negative correlation to consistently last over a long period of time between an individual stock and the broader stock market. Later on, this case becomes a good example of an outlier stock, returning back to being relatively in sync with the broader stock market over time after its divergence towards an inverse correlation from a previous period when there was a major downturn in the stock market.